I'd like to give a very warm welcome to our moderator, Brian Pallas, the CEO and founder of Opportunity Network. Over to you, Brian.
Hi, everyone. Thank you very much for having me here today. Thank you, Anita. Thank you, Emma. Thank you, KiwiTech. I'm Brian Pallas, and I'm going to be your moderator today. So I want to keep it lively. I'm going to spend just a couple of minutes telling you about me, and then we're going to switch to our panel, and I'm going to start asking a bunch of questions to our panelists. At any time, feel free to type a question in the chat. We'll try to pick them up if we have time. And everyone in the panel has really promised they're going to be briefing their answers, so we're going to be able to get a lot of questions from you as well. So a couple of words from Opportunity Network. We are the world's largest business matching platform. So we work with 43,000 CEOs in 140 countries, and we help them do business with one another. So raise capital, make investments, sell their companies, do commercial agreements with one another. KiwiTech is actually one of our 43,000 members. And basically, we help our members over $370 billion worth of deal flow. But enough about us, and let's move to our four fantastic panelists. We have James Kenefick from Azafran Capital Partners, also one of our members. Olaf Hanneman. If I'm butchering last names, you can punish me later. The co-founder of CVVC. Nihal Mehta, the general partner and founder of ENIAC, and Iris Fujura from Golden Seeds managing director. So a warm welcome to all four of you. And as we get started, I already want to start with my first question for you. So guys, there is plenty of funds around, and we all hear a lot of VC names. Now, what makes you guys unique? If you can briefly introduce your fund and tell the one thing that makes you stand out from all the crowd of funds. Please, the floor is yours. Sure.
So I'd love to talk about Golden Seeds. Golden Seeds is a fund that was created 15 years ago. It's actually an angel organization, so it's not a fund, although we do have a fund associated with it. It was created when a woman who was working on Wall Street looked around and said, gee, 2 to 3% of small startups that are women-led get angel funding. And she decided that the only way for women to get money was to create a class of women investors, and also to start a focused group focused on investing in women-led companies. And that's what Golden Seeds' mission is. So in that 15 years, angel investing in women-led companies has risen to maybe 20 to 23%. But at the VC level, at the next level of funding, it still runs around 2 to 3%. So one of the things that we at Golden Seeds are doing is trying to assure that we connect up with other VCs in order to bring our portfolio companies along. And I'm happy to say that our average rate for our companies raising their next round has been around 63%, something along those lines.
Thank you. Very exciting. Who's going next? Or should I call you in a specific order? So from now on, any question I'm asking, the first one to answer is Iris, followed by Olaf, followed by Nihal, followed by James, last but not least.
Excellent. There you go. We need some structure there. See, so CVVC, we're based out of Zug in Switzerland. Our focus is on early stage startups that build applications based on blockchain technology. So we're blockchain focused, but we're not focusing on crypto nor on protocols, but startups that build applications. We go early stage. We have designed and ran now twice our own incubation program, specifically for blockchain startups in mind. One of our differentiators is that we have, aside from the focus, our own what we call ecosystem business through CV Labs, where we operate co-working spaces for blockchain startups in Switzerland, in Liechtenstein, and in Dubai, and will expand that globally. Have an advisory business and run events from big to small, as well as startup competitions. And the other USP, I would say that when we invest in parallel from our own equity, as well as from a fund-like structure. Given Iris mentioned the female founder focus, we do include that actually in the application process for our incubation program, whereby we run a fast track for all suitable applicants that are either diversity founders or that work towards a UN Sustainable Development Goal as part of their business.
Very exciting. Thanks. Next, Nihal.
Hey guys, I'm Nahal, co-founder of ENIAC. We're in New York and San Francisco, early stage software venture fund. The one thing that sets us apart, to your question, Brian, is we think consistency. We've been investing leading seed rounds for 11 years now. And obviously seed has grown quite a bit from, our first fund was $1.5 million in 2010 to our current fund, with Fund 4, which is $100 million. Seed rounds 10 years ago were, and you guys remember, 250 to 500K. Now seed rounds are, $4 to $5 million on the high end. So there's been a large, obviously, phase shift in the industry. The 500K rounds now are called pre-seed, and the A rounds of 10 years ago are now called seed rounds. But in any event, we've been doing that for a long time, and we've had some successes. Companies you've heard of are Airbnb, Uber, Attentive. Of course, many other companies are much smaller but growing fast. And yeah, it's been amazing. I'd say that the best part of ENIAC for me is, and the definition of success, as far as I'm concerned, is doing what you love with who you love. And my partners are best friends from college, known them for 25 years. And I get to meet dozens of founders every week who inspire us, and we continue to learn from.
Fantastic. Thank you very much. Last but not least.
I guess that's me. Well, good afternoon, everyone. James Kennefick from Azafran Capital Partners. We're in New York City. We are a $200 million fund. We write checks between $2 and $8 million. We focus primarily in North America, but really the eastern half, from Toronto down to Austin, all the way over to Europe, up into Helsinki and Tallinn, Estonia, all the way down into Berlin and into Israel. Specifically, what we focus on is voice, acoustics, and imagery. Those are three inputs or modalities that relate to health and wellness and IoT enterprise. One of my partner is Marty Fisher. He was the president of AOL Technologies in its heyday for 12 years. Between him and I, we've done over 20 startups. We've been involved in over 100 M&As and created a little over 9 billion in value. I think what's really unique is that we bring, I would say, not only a lot of experience, but I've been a YP. We have a YPR, so I'm a YPR for 20 years. So we bring the YPO network and the AOL network to add a lot of value add to our companies. We kind of consider ourselves almost like a partner. So we actually have an acceleration platform to help our companies grow very quickly. And that's a little bit that makes us stand out.
Thank you very much, James. So my second question for all of you is, of course, a question that is very core to what we do. As the biggest business matching platform, I'm curious to know how you guys source your deals, and if that has changed in any meaningful way during COVID. And also if you had a chance of trying any platform or ours, and in general, what's your feeling around the sourcing and sourcing in COVID time specifically? Iris.
The way we source our deals is through our ecosystem. We have We have 285 national members, so a lot of our deal flow comes in through our members kind of going out and doing what their normal things are. Again, we're an angel group, so it's a volunteer organization. We don't have staff that goes out and sources deals. We also, so it's through our own connections and networks. Also through events like this, where people may have not heard of Golden Seeds, our mission and our vision. And since we are one of the oldest and largest angel organizations in the United States, we do have a brand that seems to be recognizable. Generally speaking, our website is where companies come in and apply. We also offer office hours to the ecosystem in all of our chapters. So we are a national organization, but we have multiple chapters in Silicon Valley, New York, Boston, Phoenix, New Jersey, Atlanta, Dallas, Houston, Atlanta, and those office hours, we open up to entrepreneurs to just sit down with investors to talk about whatever they want to. And they will sometimes then come back, but we're not recruiting for deal flow at that point in time. So it's mostly through being connected through the ecosystem. I'll oftentimes get, ACA folks, Angel Capital Association folks, or other folks here in the area. We have a loose syndication of about 16, 18 angel groups here that will pass things around.
Thanks. Very insightful. Olaf.
Okay, so for us, as a background, we started investing late 2018, early 2019. So we're quite young. We've done 27 investments in 16 different countries. Initially, it was, we ran a few startup competitions focused on blockchain industry before we started investing, almost like an event business, then turned it into events. So initially it was events, which obviously now has turned into more virtual things, and it's a little more difficult to network on that side. And now I would say it's threefold. It's one, our own advisory team and immediate network of mentors and partners that help us in the incubation program. Two, other VC partners that we know, who know where we are in the development, i.e. early stage, and send companies to us. And then lastly, I would say our own portfolio companies who, when they have been through our program, often go back to their home countries. Some stay in Switzerland because it's a great place to start a blockchain business. But when they go back and spread the word in their own network. So I would say those are the three key elements in terms of platforms. Not that much experience. For the incubation program, we are using F6S, but more as the kind of Q&A screening tool. I wouldn't say we get a lot of inflow through their platform. It's more that we're using it on the private side to manage the inflow.
Thank you very much. Nihal.
Thanks. Our flow comes in through probably 3 different sources. So every month we see anywhere from 500 to 600 companies that come in through to ENIAC. One category is our existing founders. So we have about 140 founders now. And a lot of those founders are coming back to create their second and third companies, which, by the way, is a dream, to be able to back them again. And that's just a function of being in the business for over a decade. Those founders also are great referral sources to other founders. So that's category 1, founders. Category 2 is co-investors, because we're so focused on seed. We played Switzerland. Somebody's in Switzerland now, right? Is it Olaf or? Yeah, exactly. So we play Switzerland with the pre-seed and the Series A folks, because we don't compete with them. So companies that graduated pre-seed cohort, we love to lead their next round. Series A folks send us deals that are too early for them. So that's one category, co-investors. And by the way, seed's very collaborative as well. These rounds are 3 to 4 million. Like I said, we're never writing more than half of that round, so we're happy to collaborate with another seed fund. And the third category would be our own networks. For the first decade of our careers, we built startups. I built 5 startups personally. Happy to say that the majority of those startups failed. 3 out of 5 failed. two were successful. So I got my share of scar tissue and muscle memory. But my three other partners as well, we all built startups. We built 10 venture-backed startups individually. And so our own networks also, end up generating that third category of deal flow. So altogether, top of the funnel, we're looking at anywhere from 500, 600 deals a month. We do an average of a little bit less than one deal a month. We run at about 10 deals a year that we invest in.
Thank you. Very insightful. James.
Okie doke. Well, I'm a YPOer, and YPO is a member of the Opportunity Network. So YPO is about 28,000 CEOs. And I literally get every day select deals from YPOers all over the world, as many as 10 a day. So one is the YPO network. Two is we focus on 38 cities. We have a whole outreach program where we actually deal with a lot of seed and feeder funds where we could be their big brother or big sister and write that $2 to $8 million check. So we got a tremendous amount of deal flow from that. And the third thing is we have our own research team. We have about 4,700 companies that are in voice, acoustics, and imagery. And we break them down into actually 408 different attributes in 84 different industries and track all their tech tools and track all the transactions. And from there, we end up with about 1,500 addressable investable companies. And from there, we narrow it down to the top 20.
Thank you very much. And for all the people listening, keep piling up questions. I'm not ignoring you. I just have one more question I want to ask everyone. And then I'm going to go and read it through all the questions and allow all panelists to answer, or if it is directed to a specific panelist, put the name there, and I'm going to make sure they're going to answer you. So my last question for you guys is, what is your take on 2021? Do you see the case for investments that are in niches that a year ago would have been completely unlikely, or are you mostly planning on staying course? How has the last year influenced your approach to companies, investments, niches, and so on? It is.
The last year influenced in this manner. What we did was we looked at our portfolio companies immediately when the economy started tanking. We have 74 portfolio companies. We reached out to them. We shifted to virtual in March. We have, as I said, we had a national organization, but each of the chapters was operating independently for screenings and forums and diligence to a certain point, and then we would syndicate nationally and externally. So what we did was we got with our portfolio companies. We determined what resources they needed in order to survive. We started doing virtual screenings for the ones who needed immediate fundraising. And then we continued on with the others in order to highlight them with the rest of the national organization. Our investment dollars kept pace. We are still on track. This year, we've invested 9.8 million, and we're on track to hit our average of 10 to 12 million investment this year. 6.7 million of that went into follow-on deals, rounds for some of our portfolio companies that needed some bridging in this COVID time. We also formed a COVID task team in order to evaluate companies that might either be impacting COVID or pivot due to the COVID pandemic. And so we had a team of clinical doctor and research doctor, myself as kind of a program manager, and one of our New York deal flow members, and we evaluated companies very rapidly on a weekly basis. So I feel like one of the things the pandemic did was shoved us more towards virtual meetings. Silicon Valley, San Francisco was already doing split virtual and in-person meetings. We went national, and we've been doing it on a weekly basis.
Thank you. Extremely insightful.
Yeah, so changes for us also more kind of organizationally than investment focus. Organizationally, well, one, this year, more focus on the existing portfolio companies, but still looking to diversify the portfolio in our kind of chosen focus areas. Now that we're planning the next incubation program for the coming year, so the last one we ran early this year, which was still a live event for 3 months. The next one next year will in all likelihood be a either virtual or semi-virtual incubation program, which is a totally different logistical exercise, but also then you need to figure out how to really get the kind of the network benefits of bringing everybody together. How do you transport that into the virtual world in the context of a 3-month incubation program? So that's organizationally. In terms of our investment focus, we had already identified pre-COVID 6 areas within blockchain application that we believe, are end markets that will grow over proportionally due to the current social economic environment. And we believe many of those will actually accelerate due to COVID. So as an example, one of the areas is future of work, i.e. gig economy and all of that stuff, which in itself is a big trend, but due to COVID will increase further. The same goes for e-commerce and logistics. The same goes for security, cyber, IT, and digital identity. So in all of those areas, and obviously lifestyle and health is a different one. So in all of those areas that are focus areas for us, we actually see continued investor interest and continued great use cases from the startups. So no change on that side.
Thank you. Nihal.
Yeah, I think one thing that's changed is our ability to diligence companies, because pre-pandemic, we spent a lot of time at Seed, really spending a lot of time with the team. At Seed, it's 90% about the team. You don't have much other signal. So post-pandemic, obviously you can't really meet folks in person. It's much harder to do that. And we realized very quickly what data signals we were not getting. When you're in a room with a founding team, body language, even like the subtle, the co-founder rolling their eyes, and when the other co-founder is talking, all those little cues are incredibly important when you're assessing a deal. And, those go away over Zoom, unfortunately. So, I think we had to over-index on the founding team references on their stories, spending a lot more time with them individually. And then we're also probably leaning towards folks that we've known for a while in our networks, versus brand new people. And so either people we've known over the past kind of 2 decades, or maybe a co-investor that knows them well, that we'll partner with, to essentially de-risk, founder issues. And founder chemistry is one of the most important things at a seed stage startup. So that's one change we had to implement post-COVID. In terms of spaces and sectors that have been accelerating or decelerating, we actually published a blog post on our website, eniac.vc, that talks about areas we think are positively affected and negatively affected, by COVID. High level, generally speaking, software and SaaS has accelerated tremendously. I think everybody has seen that. But high level, physical businesses like brick and mortar, whether it's a restaurant or a WeWork, have not. So anyway, we put some thoughts together in a blog post, and that tends to be our North Star in terms of companies we're looking at. But for us, team trumps everything. So if we find an amazing team that wants to build WeWork 2.0, even in the height of a pandemic, we'll definitely take it seriously.
Thank you. James.
Okie doke. It's been interesting. Voice, acoustics, and imagery, really what is underneath that is machine learning and parts of AI. The COVID has put our mission investment thesis mission critical. So that's been really interesting. If you notice, we also focus on health and wellness and IoT enterprise. We used to say IoT enterprise and health and wellness. So we've seen a huge acceleration in health and wellness. We had to go pencils down in a few areas like hospitality. Obviously, that industry is significantly in trouble. Other areas kind of picked up. So from our existing fund, our first fund, all the companies in there have actually all doing well because they're basically in that investment thesis of voice, acoustics, and imagery. And these are all technologies that, help us live the way, we're doing Zoom calls here today, but they're either touchless or they're listening to how we breathe. We have a new technology coming out, a company that actually can do voice screening for COVID in about 20 seconds. And that's being rolled out with the Mayo Clinic in January. So, we like to stay on the cutting edge. That's really what we do. I mean, a lot of our companies will be acquired by the FANGMA companies or the large, I'm gonna call it health and wellness companies out there. And that's part of our game plan.
Thank you so much. And at this stage, we're now going to start giving a voice to all the 200 people that are listening. I see we have a number of open answered questions and chat. I'm going to devote the next 10 minutes that we have together to make sure that all of you get an answer. So keep piling it up. I'm going to ask all the panelists to be extremely brief as they provide their answers so we can fit in as many as possible. Some are directed to specific people. I'm just going to direct it to you. Otherwise, the sequence is always Iris, Olaf, Nihal, and James, just to make sure that we keep it lively. So first question I'm getting is, are angel investors interested in early startup with 10,000 app install over 4 months, assuming continued growth? Is it too early? Let me transform this question into what makes early too early? Is there such thing as too early? Iris.
Yes, I would say there is something that's too early for us in terms of de-risking. We want to see at least a prototype or a beta test. We want to see some traction. We'd like to see some revenue if possible. And we'd like to see some customer interest or letters of intent or that sort of thing in terms of any sort of venture. Actually, we're very agnostic in terms of our investments.
Good. Olaf, what is too early for you guys?
Well, I mean, so on incubation, we want a company to be incorporated. We want them, they don't necessarily need to have revenue, but either have an MVP or be able to finish the MVP during the incubation program, during these 3 months. So we go quite early. As to the angel investor question, I would say it strongly depends on the angel. I haven't seen much on, oh, I'm just buying into a concept, right? But kind of similar stage to where we are, I would say, you do get angels. So I think it's more doing the research and finding the right angels.
Sounds good. Nihal, any comments on what do you think is too early?
Yeah, I don't think anything is too early. I mean, if you know the founder, and if you've had a good relationship with she or he, then you better back them again as quickly as you can. I'll give you one quick story. One of our first investments out of ENIAC was a company called Tap Commerce, and it was a guy by the name of Brian Long, and he ended up building a business, selling it to Twitter for about 100 million in 2014. He left Twitter in 2016 and was thinking about his next company, and without any hesitation, we led his seed round. And by the way, he pivoted since. That company was just valued at 2.2 billion last month. It's called Attentive. So again, nothing is too early. If you have a hunch, if you know the founder, then you better run at it and hustle and get it done, because the market right now is so ludicrous that somebody else is gonna grab it before you do.
Thank you. James.
Yeah, for us, too early is really anything in that seed stage. So for us, you have to have the MVP, you have to have it in beta or alpha, some revenue. I'm gonna say key members of the team, in market, say adoption and traction. If you have those, then we're interested. We will follow seed companies and actually help them out in advance by helping them build out, whether it's customers or board members or other strategic partners, until they get that kind of traction that we find attractive. And so many companies, we say we go slow in order to go fast. We'll track them for 6, 9, 12 months. And then once they have that, I'm going to say that momentum, then we'll partner up.
Thank you. Great questions. Now I have a challenge for you, 4 panelists. We answered 1 question out of 15, so I need you to be even more quick in providing the answers. So the next one is there a mindset or approach to running a startup that seemed aligned with success to you in 2020? What is something you're looking for? Just 10 seconds.
I guess grit, the ability to take whatever comes and work through it.
The right team with the right idea, scalable at the right point in time for the right market.
Going big. When you shoot for the stars, we say you often fail and land on the moon. So we want to see founders thinking really big and inspiring us along the way.
I agree with everything that was just said, and I'll add customer momentum.
Traction. Fantastic. So next question is, I'm an investor and advisor in an AI expertise as a service co, etc., etc. What advice would you give regarding drilling down on the right seed investors with specific to AI focus, geographication, etc.? So let me generalize this question and ask you guys, as a founder, how do you pick a seed investor? How do you make sure you get the best guys?
Sorry, I got to pass on this one.
Fair enough. Olaf.
Okay. Well, 1, do your research. The approach needs to be customized and not mass produced. And then try and get a sense during the meetings, if you can get the meetings.
Fantastic. Nihal?
Yeah, research is key. Targeted intros is key. Getting an intro from the right person as well. You want to always get an intro to a partner, not somebody junior. LinkedIn is great for that. See who your mutual connections are. Go in through somebody very strong. And then ask a lot of questions. My probably the founders I'm most impressed by are ones that on a pitch call, they ask me more questions than I ask them. Interestingly enough, it's never used too much. So, you can actually exude a lot of knowledge and intelligence as a founder by the questions you ask.
James?
I agree. I'm just going to keep it short and simple. That's it. Nothing to add.
Fantastic. So next question I'm seeing is, for areas like travel or hospitality tech innovation, how optimistic are you guys that things will go back in 2021?
I'm not sure things will pick up in 2021. I think in the long term, they will definitely spike up because we've got all this pent up frustration of people who would like to get travel, but we're going to have to solve the COVID crisis, and we'll have to get vaccines out to the point where people feel safe again. I personally am invested in a hospitality venture, and I feel very hopeful for it. I see a lot of interest in it. I'm not sure it'll be 2021, but I think that there's very good possibilities.
Yeah, I totally agree. And I would urge all the startups in that space to also think about how the industry will change and what, how different consumer behaviors will develop post-COVID.
Agree with Iris and Olaf. I don't think we're back fully from a travel hospitality perspective till 2022, but there's going to be solid growth, starting next year. So I think we're almost at the bottom. I feel like very close to it, and then it's just upside. So a lot of folks are referring to 2021 as a coiled spring. So literally, as Iris was saying, there's a lot of pent up capital on the sidelines, a lot of pent up energy, and so that's gonna come back big, just like 100 years ago with the Roaring '20s. I wouldn't be surprised if we see a little bit of that over the next few years.
Nice.
Yeah, I'm going to add, I think due to the election in the US, I think the first 2 quarters are going to be strong. I think technology, as the COVID vaccine gets out, and then I think could be even stronger in the second half of the year, all driven by technologies. Everyone's going to feel a lot more comfortable. We'll be moving more towards getting back to some new normal, and there'll be a little bit more optimism, and that's going to fuel a lot of growth. And there's a lot of capital, there's a lot of opportunity, and that we're going to see actually matriculate and happen.
So next question, I'm going to take it for sake of speed. Juan Carlos Juarez is asking, I would like to meet other Latin CEOs, but I don't know where I can find them. Do you know a place or a platform? Well, on Opportunity Network, we have something like 18% of the GDP of Chile, 4 or 5% of the GDP of Spain, all represented by their CEOs. So happy to take that one myself. Moving to the next one, and Nihal specifically. The question is, I love your focus on team quality and healthy dynamics. What are you looking in a founding team when you lead the seed round?
Yeah, great question. So I think, this is a business of funding outliers, but the one pattern that we see in a lot of our successful startups is a founding team, a serial founding team. So founders that have worked together before. And usually it's 2 or 3 folks. There's diversity on the team, and that's in background, gender, skill set, perspective. Probably the more diverse these founding teams are, the higher the success rates tend to be. And the reason I say serial founding team is because we like to see them working before together. We like to say if they've had their hands around each other's necks before and they still want to work together again, then that's a really good sign. They've been through the peaks and valleys together. Ideally, they've failed before or tasted a very small bit of success before, but if they're hugely successful before, they're not going to be nearly as motivated. But if they come back with a chip on their shoulder and they know that they've been through the trenches with their co-founders and they want to do it again, then that means the world to us.
Sounds great. So I like the next question. Sending pitch decks to email addresses found on VC websites can sometimes feel like a black hole. What's the best way to ensure that a human actually receives the deck and looks at it? I think this will be very, very relevant for our 200 people. Anyone has suggestions?
Yeah, I think, Nihal mentioned LinkedIn before. I kind of commented on the do your research and try and find alternative ways in. Clearly, if that's not possible, then that is the route. And yes, that is a black hole a little bit. But the best startups, to be frank, are innovative in getting us to look at them and finding their way in. So I would almost point that back to you and say, prove that you're special through the first approach.
Sounds good. By the way, another good way for you guys to do it, our platform has thousands and thousands of investors, and they are the decision makers. As someone said before, it is critical to speak with someone senior, not just anyone in the firm. With us, we only have the CEOs. So next question is, we have a product launched, but no funds for marketing. How can we make sure that we get funding for fund seeds for marketing and so on? Anyone wants to take that?
I'll take it. If you have a product launch and you believe that with marketing you're going to scale rapidly, you're actually at the sweet spot for angel investment. The motivations for angels are a little bit different than those for VCs. Because we're investing our own money, what we're looking for is hopefully an exit through an acquisition or a larger round within 3 to 7 years. So if you're on the cusp of scaling, but you simply need a small amount of money, that's a really good pitch for an angel investing team. We typically are the people who fund the smaller companies, and then the VCs can come along and take them on to the larger rounds.
Thank you. Another question I really like from Jai Mishra: how important is to have a co-founder that you know from a long period of time? Do VC really see the kind of longevity or relationship between founders and co-founders as critical? Any comments there? Are solo founders a thing?
Yeah, I can jump in. I think for sure, solo founders are definitely a thing. Don't bet against anybody. Solo founders can definitely be a force of nature. I think the reality is, though, that startups are very hard, and it's easier to have a partner in crime with you, just a shoulder to cry on, or somebody to hug, or somebody to punch. Just being a CEO of a startup is a very lonely job, and there's a lot of peaks and valleys. So to do it with somebody else is very helpful, but it's definitely not necessary. I mean, if you look at some of the biggest companies in the world from a market cap perspective, whether it's Jeff Bezos, Steve Jobs obviously had Woz, but for the beginning of that, but there's so many incredible startups that are founded by solo founders. So, definitely nothing against them, but if you can find somebody that you trust and that you love, and you can see working with for a decade every day, then it's very helpful along the journey.
Thanks. So another question I like, and by the way, guys, I'm going rogue here because I think our time is basically over 5 minutes ago. So I'm going to continue until either every panelist drops out or someone is going to take the line back from me. What advice do you have to determine the proper amount to ask for during the initial round of funding for a SaaS company? How do you size a round?
Well, you need to size the round in a way that you're not going to be fundraising again for another 12 to 18 months, basically. You need enough runway to be able to operate your company for about a year and a half. You don't want to be continually fundraising. When you size the round, though, you also need to be looking at what you're going to be getting as a result of that, because what you need to do is be able to promise what you're going to get through this, and you need to be on the cusp of scaling. So the intention is to have enough runway to be able to survive, but also accomplish certain key milestones during that period of time.
Fantastic. Next question is there an age limit for a founder? Would you guys invest in someone that is 50, 60, yes. 70, 80?
I'll take the head shakes as a quick answer from everyone. And I hate to do this because I know you guys are having so much fun, but I do have to jump in because we have our core portfolio companies on deck waiting for you guys. But thank you so much, Brian. And on behalf of all of our guests today, I want to sincerely thank each and every one of our panelists. Just what a fantastic day we've had so far. We are capturing all of the questions that we do still have remaining because I know there's a ton of them, and we'll make sure that we get those answered and get those connections set up for afterwards. We'll also set up any sort of introductions that we need to have. We'll have a feedback form where the audience members can request or provide any additional feedback there. But thank you again to just everyone on the panel and Brian for leading such a fantastic discussion.
On behalf of everyone, our pleasure to be here. We could have continued until you kick us out, so you did definitely well in putting a hard stop, because you give free reins to an Italian. You know, we're never gonna give you the mic back. One last thing before we part, a tip for the 176 people that are here. If you have less than 2.5 million in revenues, you can go on opportunitynetwork.com. If you have more than 250K and less than 2.5 million, you can get a free lifelong membership to our light tier. That's our gift to make sure that COVID doesn't stop any of you. And to our panelists, thank you very much for being with me for all this time and a few minutes over.